for next year. Yeah, I would say in the past month, the success of vaccine would be a very good game changer for next year. The vaccine would help us to reopen the economy on a broad-based basis. You have seen in the second half of this year that some countries they already reopened the economy, but with the vaccine, some service sector or some country that's still being hit, the economy being hit by the COVID-19 before, they would get a great hope to reopen. So in terms of economic growth, we probably could see a short-term spike in growth again for the first half of next year, and probably would be a little bit slowed down on the second half of next year. That would be on the macro outlook. The stimulus, both in terms of monetary policy, huge liquidity, low interest rate still on, and the investor would still have a very high hope on a very large liquidity in the market. On the fiscal spending side, we expect some kind of big packages from the US. It might be smaller than what we expected with Democrat sweep that we expect in the past 2 months, but with a split of government, economic recovery, I mean the US economy recovery would still be the focus of the new US administration. So we are quite certain that the new government would still put all the support to the economy. So that would be on the economic side. In terms of the market, we expect to be a very good year for equities again, because you would see the low interest rate still on. We don't have the price pressure. Price pressure, I mean, we don't expect a high inflation. So in this environment, it really supports the risky asset, i.e. the equity. And with the composition of equity in every country, they are quite different. For the US, they are tilted toward more new economy or technology stock. So we still expect the positive return on that side as well. But investors should also turn their focus on the other side, I mean non-US asset as well, because with a great fiscal package, you would expect the US dollar to be weakened. So investors should put or allocate more money toward the non-US asset. That means Asian market, China in particular, and some European asset. That would be in general. For the fixed income, as you see, the government yield is too low. They cannot make money anymore. So investors should allocate the money to the credits, I mean the corporate bonds and the high yield market. In this case, they can enhance the yield to their portfolio. But being said that, I would say diversification, a good diversification would be a key for the success, because even with the vaccine, you still facing some challenges in terms of structural changes. So partly we are positive on equity, but investors should be aware that volatility still be in the market. So they should gradually increase their exposure, watch the market, and monitor all the policy.
We have seen that.
Yes.
It's expensive. Or?
Well, we would say it's higher. I would say equity. Their equity price are higher than before, but in terms of being said expensive or cheap, we would like to be focused on a specific sector. You would see that we usually say the new economy sector, that income, profit still experience a long-term growth, like higher than 20% on a cumulative basis. so they deserve a higher price. So the key to success is not to look at the valuation on the broad base. You don't discuss what is the PE ratio as S&P, what is the PE ratio for the set index. But we should focus on a specific sector and specific stock and look deep in detail of how they generate income and profitability, and then decide at what price you want to invest and for how long.